Welcome to Griffonomics.
Glad to be here.
So today we are doing something a little bit different.
Yeah, we are.
We're pulling back the curtain on a topic that it really feels like it's ripped straight from the pages of some techno-thriller novel.
It really does.
But it's actually buried deep, I mean incredibly deep, in the financial filings of a company that, well, they might just hold the keys to the entire American manufacturing future.
And this isn't just your standard balance sheet analysis today.
Right.
This is a story about geography. It's about complex chemistry and, honestly, extraordinarily high-stakes geopolitics.
Exactly. So before we even get into the raw numbers, I wanted to start with a scenario for you.
Okay.
I want you to imagine for a second that you wake up tomorrow morning. It's a Tuesday.
Just a normal Tuesday.
Right. You reach for your smartphone to turn off the alarm, and it's a brick.
Dead weight.
Completely dead weight. You go out to the garage to start your hybrid or your EV, and the motor is totally silent.
Nothing happens.
Nothing. You look up, and the fighter jets at the local Air Force base, they're grounded. The wind turbines that generate the city's power have just stopped spinning.
Wow.
And the reason isn't some massive cyber attack. It isn't a fuel shortage. It isn't a pandemic. It's because of dust.
Specific, highly magnetic dust.
Right. We are talking about rare earth elements.
Which are in everything.
Everything. And for the last few decades, if you wanted the high-powered magnets that make modern life actually work, the things that make your speakers small or your hard drives fast and missiles accurate, you essentially had one single option.
China.
But today we're looking at a company that is trying to change that entire map.
Completely redraw it.
We are diving deep into USA rare earth, ticker USR.
USR. And it's really crucial to understand right off the bat that this isn't just some small mining outfit.
Right. They aren't just out there with pickaxes.
No, they aren't just hoping to strike glibs in the hills and then sell the claim to a major conglomerate.
Yeah.
This is an attempt to reconstruct an entire industrial supply chain. Literally from scratch. Right here on American soil.
And they have got an absolute war chest to do it. We are talking billions of dollars in capital.
Massive backing.
So the mission for this deep dive is pretty simple. We are looking at a huge stack of documents today.
The 10Qs, the S1s.
And the S1s, the earnings call, transcripts, internal strategy, presentations, and all these analyst reports regarding their massive $3.1 billion capital raise.
Which is a staggering number.
It is. And we are going to use all those sources to answer one primary question. Is USR a true sovereignty play, something that is actually going to save the U.S. supply chain, or is it just a massive money pit?
That is the billion-dollar question right there. Or rather, the $3.1 billion question.
Exactly.
Because when you look at the sheer scale of what they are attempting, the stakes literally couldn't be higher.
Right.
This isn't just about making a profit for shareholders. It's about whether the United States can actually physically make things anymore.
Okay, let's start unpacking this. Because when we say mining company, people immediately picture guys with pickaxes and hard hats covered in soot just digging a hole in the ground.
Yeah, the classic image.
But USR is pitching something so much more complex. They call it the mine-to-magnet ecosystem in all their filings. What exactly does that phrase mean?
So usually in this specific industry, you have extreme fragmentation.
Okay.
It's basically a broken chain. One company digs the rock out of the ground.
The upstream part.
Right, the upstream. They concentrate that rock, and they put it on a boat, and usually they ship it straight to China.
Got it.
Then another totally different company takes that rock and refines it into an oxide, which is basically a white powder.
Okay.
Then another company turns that oxide into a metal, and finally a fourth company takes that metal and makes the actual finished magnet.
That sounds like a complete logistical nightmare, even in the best of times.
It is a nightmare. And USR is stepping in and saying, no, that's way too many single points of failure.
Too much risk.
That's way too much geopolitical risk for critical components. They want vertical integration.
Meaning they want to own every step.
Every single step. They want to own the dirt, they want to own the chemistry set, and they want to own the factory floor.
Wow.
They basically want to control the molecule from the very moment it leaves the Earth until it's spinning inside a motor.
So they want to be the whole chain.
Right.
From the crust of the Earth right to the component in the EV.
Precisely. And to truly understand how they plan to do that, we really have to break down their three distinct business segments.
Let's do it.
It all starts upstream, at the mine itself.
This is the Round Top deposit, right?
Correct. It's located in Sierra Blanca down in Texas.
Okay.
Now, calling it a mine almost undersells what it actually is. Geologically speaking, Round Top is kind of a freak of nature.
How so?
It's what geologists call a rhyolite dome.
Mm.
I want you to imagine a massive bubble of magma that pushed up towards the surface millions of years ago but never quite erupted.
Okay, so it just cooled underground.
Exactly. It just solidified right there into a dome.
So it's essentially a mountain of potential.
It is literally a treasure chest.
Mm-hmm.
According to the geological surveys and the filings, it contains 15 of the 17 rare earth elements.
15 out of 17, that's almost the whole set.
It is, but here's where it gets really interesting, and this is incredibly crucial for you listening to grasp. Not all rare earths are created equal.
Right.
You basically have lights and you have heavies.
Lights and heavies. Kind of sounds like beer options at a dive bar.
Yeah, it does, but it's a little more expensive than beer.
I would imagine.
The lights, things like lanthanum and cerium, they are relatively common. You can actually find them in a lot of places around the world.
And what are they used for?
They're used in polishing compounds,
Mm-hmm.
glass manufacturing, catalytic converters in cars.
Mm.
Important stuff, but not the critical bottleneck.
Okay, so what about the heavies?
The heavies, specifically elements like dysprosium and terbium, those are the absolute holy grail.
Dysprosium and terbium, Db and Tb on the periodic table. Why are they the holy grail? What makes them so incredibly special?
It comes down to heat.
Heat.
Heat and resistance to demagnetization. Think about a standard magnet. If you get it really hot, like the temperatures inside an electric vehicle motor that's spinning at 10,000 RPM on the highway,
Right.
or inside a missile fin that's moving at Mach 3 through the atmosphere, that standard magnet loses its magnetism.
It just stops working.
It fails completely.
Mm.
The physics of it just break down under that thermal stress.
Mm.
But if you take that magnet and you sprinkle in some dysprosium and terbium, it stabilizes it.
So it acts like a heat shield for the magnetic field.
Exactly. That magnet stays incredibly strong even in hellish temperatures.
Yeah.
You simply cannot manufacture a high-performance modern motor without the heavies.
And this Round Top Mountain in Texas has them.
The filings show it is exceptionally rich in them. And honestly, that's not even all.
There's more.
It's also loaded with a whole other category we call tech metals. Things like gallium, hafnium, zirconium, lithium.
Gallium. I've definitely heard that mentioned in the context of semiconductors recently.
Oh yeah, gallium is absolutely critical for advanced semiconductors, for radar systems, for high-end LEDs.
And where do we get gallium now?
The U.S. is currently almost 100% dependent on imports for gallium.
Yeah.
And largely from China.
So USR isn't just digging for magnet stuff here.
Not at all. They are sitting on a deposit that directly feeds the computer chip industry too.
It's a polymetallic deposit.
Yes. It's basically like a one-stop supermarket for the entire defense and advanced tech industry.
Okay, so they have this magic rock in Texas. That's step one. But you obviously can't just shove a raw rock into a computer chip or an EV motor.
Right, you can't. And that brings us to the midstream segment. This is the processing phase.
The chemistry phase.
Exactly. And historically speaking, this is where the West always fails.
Right.
We know how to dig rocks. We're actually really good at moving Earth, but we basically forgot how to do the advanced chemistry.
We lost the recipe.
We did. We forgot how to separate these specific elements, which are chemically very, very similar to each other. You have to separate them and turn them into pure metal. This is what the industry calls the gap.
The gap that usually just gets filled by putting it on a boat and shipping it to China.
Yes. But USR is aiming to do this internally.
Okay.
And they made a very strategic move here, a massive acquisition.
Because they couldn't just invent it all from scratch. Right?
Exactly. Inventing these separation and metallization processes from zero takes decades of R&D, and honestly, it often ends in failure.
So what did they do?
They went out and they bought an existing company called Less Common Metals, or LCM for short.
LCM. We're going to talk a lot more about LCM later in the deep dive, because looking at the sources, it really seems to be a major pivot point in this whole story.
It absolutely is.
It feels almost like the secret weapon in their entire arsenal.
It is the bridge. Because without LCM, you really just have a pile of expensive rocks. With LCM, you actually have high-grade metal alloys.
Which you need to make the magnets.
Exactly. And that leads directly to their downstream segment, the factory.
Okay, so this is the facility they are building in Stillwater, Oklahoma.
Yes. A 310,000 square foot behemoth of a manufacturing plant.
That's massive.
It is. This is really where the rubber meets the road, or rather where the metal meets the motor.
Right.
This is where they're going to manufacture sintered neomagnets.
Yeah.
NdFeB magnets.
Sintered neomagnets. Try saying that 5 times fast. What does sintered actually mean in this specific context?
So sintering is a really specific metallurgical process. You take a fine powder, in this case a highly magnetic alloy powder, and you press it into a mold to get a shape.
Okay.
And then you heat it up to a temperature just barely below its melting point.
So it doesn't turn to liquid.
Right, it stays solid, but the individual particles bond together at the atomic level to create a super dense solid block.
Fascinating.
It's the absolute industry standard for making the strongest permanent magnets in the world.
Okay, and what are their capacity targets for this Oklahoma plant? Because a factory is really only as good as the volume it can pump out.
Their targets are incredibly aggressive. The filing state, they are aiming for 4,800 tons per annum initially,
4,800 tons.
and then rapidly ramping up to 10,000 tons per year by 2030.
10,000 tons. That sounds like a big number, but is that actually a lot in the grand scheme of things?
It is massive. Just to give you and the listeners some context here,
Yeah.
the entire United States demand for these magnets is currently around 50,000 tons a year.
Oh, wow.
So this one single factory in Oklahoma could eventually supply 20% of the entire nation's needs.
Just one building.
Just one building. It
Huh.
fundamentally changes the game. It moves this whole endeavor from an experimental pilot project to a true industrial scale operation.
Okay, so to recap the board here, we have a huge polymetallic mountain in Texas. We have advanced processing tech that actually spans across the Atlantic to the UK with this LCM company, and we have a massive factory being built in Oklahoma.
That's the ecosystem.
It sounds totally great on paper,
Huh?
but here's where I want to push back and challenge the narrative a bit based on the filings.
Go for it.
Because when I looked at the actual timeline in the source material, something looked entirely backward.
You notice the magnet to mine phrasing they use?
Yes. Magnet to mine. Usually in any extractive industry, you dig the hole, you get the rock, you process the rock, and then finally you sell the finished product.
That's the traditional linear model.
Right. But USR is building the factory before the mine is even open. They are completely flipping the script.
Wow.
Why would they do that?
This right here is what management calls the strategic inflection point. We saw this emphasized repeatedly in the earnings transcripts by CEO Barbara Humpton and CFO Rob Steele.
Okay, so what's their rationale?
It's purely about financial survival and speed to market.
Survival. How does building a huge factory when you don't even have a functioning mine help you survive?
You have to think about the timeline of mining. Building a greenfield mine like Round Top takes forever. You have local permitting,
Yeah.
you have massive construction, you have EPA environmental reviews, infrastructure build-outs. It's a very slow bureaucratic grind.
Even if everyone is on board, it takes years.
Decades sometimes.
Mhm.
Now, commercial production at Round Top has been aggressively accelerated, but it's still not slated to really come online until late 2028.
Okay, so 2028 for the mine, that's still years away.
But the Oklahoma magnet plant, that is targeted for Q1 2026.
Oh, so they are going to have a functioning factory with literally no internal mine for over 2 years.
Exactly. And that is the absolute brilliance, or really the strict necessity of this strategy.
How does that work?
They will go out and buy feedstock, rare earth oxides, and metals from the open market. They will process it through LCM in Oklahoma and sell finished magnets to generate revenue right now.
Instead of just bleeding money.
Exactly. Rather than burning cash for 5 straight years waiting for a hole in Texas to open up, they are intentionally front-loading their revenue.
So they essentially become a manufacturer first and a miner second.
Correct. It deeply de-risks their cash flow.
That makes total sense from a corporate finance perspective.
It really does. It shows institutional investors, and frankly, it shows the U.S. government that they are a real business making real physical things. Not just some science project out in the desert burning through venture capital.
They solve the chicken and egg problem by just buying the egg from someone else first and making the omelet.
That is a great way to put it.
But wait, doesn't that leave them incredibly vulnerable?
In what way?
If they are buying feedstock on the open market, aren't they just buying it from, well, the exact places we're trying to avoid being dependent on? If the whole point is American independence, aren't they entirely dependent on day one?
In the short term. Potentially, yes. They have to source material wherever they can get it.
Which is mostly China right now.
The sources indicate they are actively prioritizing sourcing from friendly nations wherever possible. Places like Australia or Vietnam, or even tapping into existing strategic stockpiles.
Okay.
But this really brings up the geopolitical risk that you alluded to in the intro. The analyst reports talk quite a bit about a Band-Aid truce between the U.S. and China.
Yeah, I read that exact phrase in the geopolitical brief. There was some commentary about tariffs being temporarily paused or a tactical removal of friction between the two countries.
Right, a cooling off period.
So if everything is totally fine with China right now, why do we even need USR? If the trade war is theoretically over, can't we just go back to buying cheap Chinese magnets and saving a bunch of money?
That is the ultimate bear case argument for this stock. That is the core risk.
Because if peace breaks out, the business model collapses.
Exactly. If trade normalizes, cheap, subsidized Chinese magnets will just flood the global market again, and a company like USR could go bust because they inherently have higher labor and environmental compliance costs in the U.S.
It's hard to compete with state-sponsored monopolies on price.
Impossible, really. But the expert consensus, and frankly USR's entire multi-billion-dollar bet, is that this truce is just temporary. The undeniable long-term macroeconomic trend is structural decoupling.
Decoupling, that has really become the buzzword of the decade in finance.
It is a buzzword, but it's much more than a buzzword here. It's a physical reality. USR is betting that regardless of any short-term diplomatic smiles or handshakes, the U.S. military and the massive U.S. auto industry have fundamentally decided they simply cannot be dependent on a strategic rival for their most critical components ever again.
They got burned once and they won't let it happen twice.
Right. So USR is moving full steam ahead, regardless of what the weekly news cycle says about trade talks. They are building infrastructure for a world where supply chains are routinely weaponized.
So even if the water looks perfectly calm right now, they're out there building the ark.
Precisely. They are betting on the storm coming. And a huge key part of that arc is that company we mentioned earlier, Less Common Metals, or LCM.
Okay, let's really dive deep into LCM now, because on the surface, when you look at the corporate structure, it just seems weird. You are literally called USA Rare Earth. Your flagship mine is in Texas. Your giant factory is in Oklahoma. Why is your most critical midstream acquisition a company located in the United Kingdom?
Because, simply put, there was literally no one else to buy.
Really? In the entire Western Alliance, there was no one else?
If we look specifically at the midstream, the very complex step of turning powdered oxides into specialized metals and alloys China has a near total global monopoly.
Wow.
The source documents explicitly state that LCM is the absolute only proven scaled producer of rare earth metals and alloys outside of China.
The only one. That is wild.
At industrial scale with a 30-year track record. Yes, the only one.
I mean, I'm sure there are startups trying to do it.
Oh, there are plenty of startups. There are pilot plants. There are guys mixing chemicals in beakers in university labs.
Right.
But LCM has been doing this commercially and profitably for 3 decades. So by acquiring them, USR didn't just buy a brick building in the UK.
I bought the intellectual property.
They bought the know-how, they bought the highly guarded recipe book, and they bought the master chefs who actually know how to cook the meals.
That makes a ton of sense when you frame it like that. You can't just Google how to make a commercial dysprosium alloy and expect to get it right at a 1,000-ton scale.
Exactly.
It's not like baking a cake where you just follow the box instructions.
It is equal parts advanced chemistry and dark art. You are dealing with highly reactive heavy metals that can oxidize or even catch fire instantly if handled wrong.
Oh, wow.
You need perfectly inert atmospheres. You need incredibly precise temperature controls. And LCM has a very specific dominance in one element in particular, samarium.
Samarium. Okay, so that's another one of the 17 elements. We talked about dysprosium, terbium, and now samarium.
Yes, samarium is used to make samarium cobalt magnets.
Are those different from the neomagnets being made in Oklahoma?
They are. They are kind of the older, tougher cousin of the neomagnet. They aren't quite as strong in terms of pure, raw magnetic pull, but they are incredibly resilient. They hold their stable magnetism at extremely high temperatures and in highly corrosive chemical environments.
So where do you use a samarium magnet?
Think about the inside of a military jet engine, or the guidance fin of a hypersonic missile, or deep inside a nuclear submarine.
Extreme stress
Well,
environment.
the most extreme. You absolutely need samarium for those. And LCM is the sole non-Chinese producer of commercial samarium metal in the world.
Let that sink in. So if you are the U.S. Department of Defense and you need an advanced missile to fly straight and true, you essentially have to talk to LCM.
Which means, as of this acquisition, you have to talk to USR.
That is a massive strategic moat.
It is an incredible choke point to own. But there's actually another layer to the LCM story that I found even more fascinating in the filings.
What's that?
The circular economy aspect.
Oh, this is the swarf thing, right?
Yes, SWARF.
I just love that word.
SWARF.
Swarf. It sounds like some alien race from a sci-fi movie.
It does, but it is a very real and very important technical term.
What exactly is it?
SWARF is the industry term for the raw scrap metal that gets produced when you cut and grind down these magnets.
Oh, okay.
When you manufacture a large sintered magnet block, you eventually have to slice it up into the tiny specific shapes that the auto or defense customer needs.
Like machining any metal piece.
Exactly. And that machining process creates waste. It's basically highly magnetic sawdust.
And historically, what happens to all that magnetic sawdust? Does it just get thrown away in a landfill?
Historically, yes. Or honestly, even worse, it's legally treated as hazardous waste because fine, rare earth metal powder is highly flammable and reactive.
So you are literally paying money to dispose of incredibly valuable critical minerals.
It's a terrible system. But LCM has developed the proprietary technology to actually recycle this swarf.
Really?
They can take that hazardous scrap, reprocess it through their chemical baths, and turn it right back into pure, usable metal feedstock.
So it creates a totally closed loop.
It is the absolute holy grail of supply chain efficiency. It means USR doesn't strictly need to rely on fresh mining from Round Top for every single gram of material they produce.
They can just mine their own trash.
Precisely. They can harvest the waste directly from their own factory floor in Oklahoma, send it over to LCM, or eventually license the LCM tech to use right there in Oklahoma and put it directly back into the system.
That has to massively lower their long-term material costs.
It significantly lowers costs and it radically lowers the environmental footprint of the entire operation, which is huge for getting government grants.
So LCM isn't just a basic metal supplier. They are an advanced recycling plant and a vital technology transfer hub for the whole company.
They are the missing link. The analysts call it the missing link that makes the entire USR concept actually viable.
Because without them, USR is just a pile of rocks in Texas and an empty warehouse in Oklahoma.
Exactly. With LCM, they are a fully functioning integrated metal producer.
Okay, so we have the master plan, we have the geology, we have the advanced tech, but absolutely none of this happens without cash.
Heavy cash.
Mining and heavy manufacturing are notoriously capital-intensive industries, and this is where the numbers in these SEC filings just get staggering.
They really do.
We saw a headline number recently that honestly made me do a double take. $3.1 billion in total funding.
That is a truly massive capital raise, especially when you consider that for a company of this size as of Q3 2025, they had exactly $0 in operational revenue.
Zero revenue.
Zero.
And they successfully raised over $3 billion. That is very hard to wrap your head around in a normal market environment.
It really speaks to the sheer appetite and honestly the profound national desperation for this specific project to succeed.
Let's break down that money, because obviously it's not all just coming from one angel investor writing a single check. It's a very complex capital stack.
Right. There's a massive government slice and a massive private slice.
Let's start with Uncle Sam.
The government slice is fascinating. It's a $1.6 billion package entirely sourced from the Department of Commerce via the CHPS Act mechanism.
Wait, I thought the CHPS Act was specifically for, computer chips, semiconductors. Why on earth is a permanent magnet company getting billions in chip money?
Well, it directly connects back to those tech metals we discussed at Round Top. Gallium, hafnium, zirconium. Those elements go directly into advanced chip fabrication.
Oh, right.
But also, you have to think about the broader tech ecosystem. You simply cannot build a modern high-tech economy. Things like advanced robotics, AI data centers, specialized liquid cooling systems, lithography machines, without high-performance rare earth magnets.
They are the quiet enablers of all that tech.
Exactly. So the government is clearly viewing this specific magnetic supply chain as Tier 1 critical infrastructure, just like a multi-billion-dollar semiconductor fab plant in Arizona.
So the government is just writing a check for $1.6 billion to USR. Is that a handout? Is it essentially free taxpayer money?
Not exactly. It's very highly structured. Out of that $1.6 billion, about $1.3 billion is structured as a senior secured loan.
Okay, so that's traditional debt.
Right, it's debt. They absolutely have to pay it back, and they have to pay it back with interest. It's not a gift at all.
Okay, but what about the rest of it?
Then there's another $277 million in direct equity and developmental grants. And here is the major strings attached part that every listener really needs to pay attention to.
What's that?
The United States government is actually taking an equity stake in USR.
A stake, like they're owning shares of the company.
Yes. Based on the term sheet, the government is receiving roughly 16 million common shares and warrants to purchase another 17 million shares.
Wow.
They are effectively taking a roughly 10% ownership stake in the entire company in exchange for providing this financial backstop.
So the U.S. government is now legally a minority shareholder in a private American mining and magnet company. That feels incredibly significant.
It is a profound shift in American industrial policy. We'll definitely touch on the philosophical implications of that later. But strictly financially, it signals that the government is not just passively funding this project.
They are actively partnering with it.
Exactly. They are betting big on its success, and they actively want to capture the financial upside when it succeeds.
Okay, so that's the massive government money. What about the private side of the ledger?
That's another $1.5 billion raised via massive PIPE financing.
Which stands for private investment in public equity.
Right. Means major institutional investors, hedge funds, sovereign wealth funds putting in huge amounts of hard cash to basically match the government's commitment.
But obviously money isn't free. And when I was looking at the shareholder analysis section of the filing, there was a lot of pain mentioned for the early believers in this stock.
Significant pain. This is what we call the cost of capital. To get that combined $3 billion through the door, USR had to issue a massive amount of new stock.
Dilution.
Crushing dilution. The fully diluted share count for USR is projected to jump to hit 280 million shares.
Oh, man.
If you were a retail or institutional shareholder before this specific deal was announced, your personal slice of the pie just got violently cut in half, or even worse.
Existing shareholders face over 50% dilution.
Over 50%.
That really stings. I mean, if I bought the stock a year ago on the promise of the mine, I'm looking at this announcement today thinking, great, the company is super rich now, but my specific shares represent a fundamentally much smaller percentage of the future profits.
That is the brutal trade-off of corporate finance. The expert take on this, and it is harsh, but very simple,
Right.
is that this is simply the price of survival.
Because without it, they are nothing.
Exactly. Without this cash injection, the Round Top project is quite literally just a fancy PowerPoint deck and a patch of dirt in Texas. Stays a rock.
Right.
But with the cash, yes, you are heavily diluted, but you now own a smaller piece of a fully funded multi-billion-dollar industrial powerhouse that is actually going to get built.
It's the old Wall Street adage, right? It's much better to have a small slice of a giant watermelon than 100% of a dried-up raisin.
That is a very apt analogy for this situation. And in this case, that watermelon is now totally fully funded. They have built what the analysts are calling a liquidity fortress.
Let's look at the actual financial reality of that fortress. You mentioned they are pre-revenue right now. What does the actual forward-looking roadmap look like? When do they actually start making real money?
So looking at Q3 2025, they have well over $500 million in hard cash sitting on the balance sheet post-financing.
So they are totally safe from bankruptcy in the near term.
Extremely safe. And the revenue trickle actually starts very soon in Q4 2025, directly thanks to the LCM acquisition.
Ah, right, because LCM is an operating business already selling specialty alloys in the UK.
Exactly. They bring immediate cash flow. But the real structural number, the huge numbers kick in when the Oklahoma facility finally comes online.
In 2026.
Right. In 2026, they estimate roughly $41 million in top-line revenue.
41 million. Honestly, that feels a bit modest for a company that just took in $3 billion in capital.
It is modest, but it's just the beginning of the ramp-up. It's the very bottom of the hockey stick curve.
Okay.
By 2027, as production scales, they're targeting gross profit break-even.
Meaning they aren't losing money on every magnet they make.
Exactly. But 2028 is the true watershed year. That's when the Round Top mine finally comes online and starts feeding the factory its own cheap internal material.
And what happens then?
They target company-wide EBITDA break-even in 2028.
EBITDA. For the listeners who aren't deep in the accounting weeds, that's earnings before interest, taxes, depreciation, and amortization. It basically means the core operating business is finally self-sustaining.
Right. It means the cash coming in from selling magnets finally covers the cash going out to dig the rocks and run the factory.
And then what happens after they cross that break-even threshold?
Then comes what management calls the 2030 dream. The long-term projections, and obviously keep in mind these are management projections, so we always take them with a healthy grain of salt.
Of course.
But they are forecasting $2.6 billion in annual revenue by 2030.
$2.6 billion.
And somewhere between $900 million and $1.2 billion in free cash flow, or EBITDA.
Over $1 billion in pure profit. That is a remarkably serious number.
It is a phenomenal number if they can actually execute the plan. And that's exactly why The current valuation of the stock is so interesting to analysts.
It looks cheap.
Extremely.
Yeah.
Right now, if you actually believe those 2030 numbers, they're trading at roughly 5 times projected 2030 EBITDA.
5 times.
In the broader mining world, for a vertically integrated producer of highly strategic sovereign assets, that is potentially unbelievably cheap.
Emphasize on the if, though, if they get there.
A very big if. Mining projects are completely notorious for massive delays. Geologic surprises happen. Factory ramp-ups are incredibly hard to optimize. Yield rates on complex metallurgy can be terribly low at first.
There's a million ways to fail.
But the massive $3 billion funding de-risks a huge portion of that execution risk. They have the cushion to make mistakes and fix them.
So we have the big money, we have the ambitious plan, but I want to pivot and talk about the actual customer for a minute.
The band side.
Right, because there is a huge elephant in the room that we haven't fully addressed yet. Price.
It almost always comes down to price in the end.
China has strategically subsidized their rare earth industry for literal decades.
Heavily.
They have much looser environmental regulations, they have incredibly cheap labor, and they have bottomless state banking support. They can basically drop the global price of magnets to rock bottom anytime they want to just bankrupt a rising Western competitor.
We've seen them do exactly that in the solar panel industry.
Exactly. So my question is, how on earth does USR mathematically compete with cheap, subsidized Chinese magnets?
It's a short and honest answer.
They don't.
They don't compete. They aren't even trying to beat China on unit price. They are actively playing an entirely different game.
Yeah.
This is what the filings call the safety stock strategy.
Okay, you need to explain that strategy to me.
USR realizes they aren't selling a cheap commodity. They're fundamentally selling resilience and peace of mind.
Okay.
If you're the CEO of Ford or GM or defense contractor like Lockheed Martin, you have viscerally watched global supply chains completely collapse during COVID.
We all saw that.
You see the rising geopolitical tension in the South China Sea. You know, as a fact, that if China arbitrarily decides to turn off the magnet tap tomorrow, your entire multi-billion-dollar assembly line stops dead in its tracks.
You literally can't build the car.
Exactly. You cannot ship a $60,000 electric truck because you are missing a $5 magnetic component.
The ultimate bottleneck.
So as a corporation, you are highly willing to pay significantly more to mathematically guarantee that scenario never happens.
It's essentially an insurance premium.
It is an exact insurance premium. Customers are explicitly willing to pay a defined margin for resilience to guarantee their domestic supply against the threat of Chinese export bans.
That makes total business sense.
USR is going to these huge companies and essentially saying, look, our magnets might cost 10 or 15% more than the Chinese alternative, but we will never ghost you. We will never be embargoed. Our supply chain is entirely in Texas and Oklahoma.
I see. It's exactly like buying a standby generator for your house.
That's an analogy.
Running a generator is way more expensive electricity compared to just pulling from the municipal grid. But when a hurricane hits and the grid goes down completely, that generator is the single most valuable thing you own.
And companies are realizing they need a massive generator right now.
So they will sign the contracts.
And when you look closely at the macro supply gap, USR doesn't even need to capture the whole global market to be wildly profitable.
What did the numbers look like there?
Well, as we mentioned earlier, the U.S. alone consumes roughly 50,000 tons of these specialized magnets annually.
And right now, how much do we domestically produce?
It's negligible. It is essentially zero.
Wow.
So even if USR perfectly hits their most aggressive 2030 target of producing 10,000 tons a year, there is still a massive 40,000-ton domestic supply deficit in the market.
Meaning they could run their factory at absolute maximum capacity 24/7, sell every single individual magnet they make, and still not even come close to filling the hole in the market?
Precisely. USR isn't out there viciously fighting for a razor-thin market share against a dozen competitors. They're simply fighting to step into a massive vacuum.
A vacuum created by a lack of sovereign capability.
They are stepping into a void created purely by American strategic necessity.
That is an incredibly powerful market position to be sitting in.
If you can execute.
Always the if. So we've looked at the underlying geology of the mine, we've looked at the scale of the factory, we've traced the billions of dollars, and we've analyzed the end market.
We've covered the whole ecosystem.
It's time for the final verdict on the show today.
The moment of truth.
Based on absolutely all these SEC sources, the filings, the analyst reports, Is USR fundamentally a true sovereignty play, or is it ultimately a giant money pit? How do we definitively rate the stock today?
Looking at the totality of the evidence, I would have to rate this as a speculative guy.
Speculative buy. Emphasize the speculative part.
Yes, you absolutely cannot ignore the structural risk here. They are attempting to build a highly complex chemical mine and a massive advanced manufacturing factory entirely simultaneously.
Which is hard enough in normal conditions.
It is operationally incredibly difficult to sync those timelines. Plus, global geopolitics could abruptly shift.
Right.
Or honestly, a new disruptive technology could emerge that totally replaces rare earth magnets.
Like what?
Maybe Tesla's R&D department invents a revolutionary induction motor tomorrow that uses literally zero rare earth elements at all. That would destroy a huge chunk of USR's projected demand.
Okay, so the risks are very real and present. But what drives the buy side of your rating?
The pure buy argument is that this entire project is now massively de-risked by that $3 billion capital injection.
The pash is king.
Exactly. But more specifically, it's the government's direct involvement that is the real key.
The 10% equity stake.
Right. We are essentially watching the too big to fail doctrine being directly applied to critical minerals mining.
The government won't let it go under.
The U.S. government has explicitly signaled through the GPS Act funding that it fundamentally needs this specific project to work for national security reasons.
They quite literally have skin in the game now.
They have direct equity in the game. And as an institutional or retail investor, having the United States Department of Commerce sitting at the table as your financial partner is a uniquely powerful backstop against catastrophic failure.
It is a massive safety net.
Ultimately, this is a pure macro bet on the U.S. industrial supply chain permanently decoupling from China. If you personally believe that geopolitical trend is real and continuing, USR is currently the most direct vehicle available to ride that wave.
So, to quote that phrase we saw in the outro of one of their big investor presentations, risk defined, portfolio protected.
It really fits their whole narrative perfectly. It's an investment hedge against the globalized world falling apart.
So to recap our entire journey today for everyone listening.
Kind of a long one.
It has. We have a dormant volcano mountain in Texas packed full of ultra-valuable, heavy rare earths. We have an established specialty metal shop over in the UK that essentially holds the secret recipes to process it all.
LCM.
We have a massive 300,000 square foot factory rising out of the dirt in Oklahoma. And we have over $3 billion of public and private glue aggressively holding this entire vision together.
It's definitely an industrial moonshot.
Yeah.
But crucially, it's a fully funded moonshot.
And here is my final provocative thought for you to leave with today. We talked a lot about the U.S. government taking that direct 10% equity stake.
Which is still shocking to think about.
It is. If the United States government is now actively taking direct equity ownership stakes in private commercial mining companies, have we officially crossed the Rubicon into the era of American state capitalism?
That is an incredibly profound question. Because historically, we usually associate that exact economic model with, well, primarily with China.
Exactly. We used to criticize it. But if the only mathematical way to successfully compete against state-backed Chinese monopolies is to essentially become a state-backed American monopoly yourself, what does that fundamentally change about our concept of the free market economy?
It blurs the lines entirely.
And if they're willing to do it today for rare earth magnets because of national security, which major industry is next on the list? Is it going to be domestic lithium production for batteries?
It could.
Is it going to be massive copper mines? Is it going to be advanced biotech and pharmaceuticals?
It's a slippery slope. Because once you force that door open for one critical industry, it becomes incredibly hard to justify closing it for the next one.
Yeah.
It fundamentally changes the very nature of American free enterprise.
Definitely something heavy for you to mull over as you go about your day. That is all the time we have for this deep dive into Griffonomics and the incredibly complex world of USA rare earth.
We really hope you learned something valuable today.
And we hope you look at the silent motor in your EV or the tiny speaker in your phone just a little bit differently from now on.
Thanks so much for listening. Catch you next time.